Are you looking to maximize your tax return in Canada? We're here to guide you. Today, we'll simplify this process and present it in smaller steps. First, assemble your documents. This includes T4 slips, invoices for eligible costs, and other salient tax papers. Keep track of these to avoid a last-minute panic. Make sure to keep track of these throughout the year to avoid any last-minute scramble. Next, understand your deductions. Deductions are a key component of your taxes. They diminish the income which is subject to tax. Essentially, the higher the deductions you declare, the less taxable income you have. Deductions can be seen as your weapon against overtaxation. They encompass various aspects of your expenses, including but not limited to contributions to your registered retirement savings plan, childcare costs you've shouldered, as well as interest accrued on your student loans. Common deductions include RRSP contributions, childcare expenses, and student loan interest. Then, consider your tax credits. Tax credits are not like tax deductions. While deductions decrease your taxable income, tax credits cut down the tax you owe directly. They function as a dollar-for-dollar subtraction from your actual tax liability. Common credits include the Canada Employment Amount, a benefit for workers, the Disability Tax Credit, intended for individuals with disabilities, and the Public Transit Tax Credit, designed to encourage the use of public transportation. They can significantly reduce your tax liability. These are just a few examples of the numerous tax credits available, and the Public Transit Tax Credit. Don't overlook the potential of tax shelters. These are specific investment strategies that give you a unique advantage in financial planning. They're designed to spawn benefits by either postponing your tax payments or trimming down your taxable income. Among the most popular tax shelters are several types of investment accounts. Two common examples that you might have heard of are registered retirement savings plans, better known as RRSPs, and tax-free savings accounts, widely recognized as TFSAs. Finally, consider seeking professional help. Taxes are a world in their own, intertwined with government policies, regulations, and the economy. The laws surrounding them are complicated, multi-layered, and constantly evolving. They're much like a labyrinth. It's not uncommon for a layman to find himself lost in this intricate maze. As such, it is advisable to seek the assistance of a certified tax professional. These experts have an in-depth understanding of tax laws and their implications. They can guide you, helping you to navigate this tricky terrain, and provide expertise to ensure you're making the most of your return. They take into consideration your income, deductions, credits, and other factors that could potentially increase your tax savings. With their help, you can rest assured that you're not only compliant with tax laws, but also maximizing your return. To recap, maximizing your tax return involves gathering all necessary documents, understanding your deductions and tax credits, leveraging tax shelters, and potentially seeking professional help. This process might seem daunting at first, so breaking it down into manageable steps can go a long way in making it less stressful. Firstly, it is important to get organized. This means collecting all necessary documents such as your T4 slip, receipts for any business-related expenses, and records of any charitable donations or medical expenses. Having these documents on hand not only helps in accurately calculating your income, but also in identifying potential deductions and tax credits you might be eligible for. Next, understanding your deductions and tax credits is key. These may vary depending on your personal circumstances, but can include things like childcare expenses, tuition fees, or even home office expenses. It is crucial to be aware of these, as they can significantly reduce the amount of tax you owe. Thirdly, leveraging tax shelters can be a great way to reduce your taxable income. This could involve contributing to a registered retirement savings plan, RRSP, or a tax-free savings account, TFSA. These types of accounts allow you to grow your savings tax-free, which can lead to significant savings in the long term. On occasion, you might find the tax process overwhelming or complex, and it's in situations where seeking professional help can be highly beneficial. Tax professionals have a deep understanding of the tax code and can provide guidance tailored to your specific situation. Remember, everyone's tax situation is unique. What works for one person might not work for another. So, be proactive about staying informed. This could involve reading up on tax laws, attending seminars, or even joining online forums. As you navigate the tax landscape, don't be afraid to seek help when necessary. Whether it's asking a colleague, a family member, or hiring a professional, getting the right help can make all difference. It's important to note that these steps are not a one-time solution. The journey to maximizing your tax return in Canada is an ongoing one. It requires diligence, knowledge, and a dash of savvy. Tax rules and regulations are constantly evolving, and staying on top of these changes can help you adapt your tax strategy as needed. So, whether you're an experienced taxpayer or just starting out, we hope this guide has provided some useful insights. Remember, every dollar saved is a dollar earned, so get out there and make the most of your hard-earned money.